everyone. So again, I welcome you all in this revision video series. So today we are going to discuss Unit 7 of IEIFS Module A, that is economic reform. So first of all, let's talk about what is economic reform. So economic reform is a process where a government specifies a declining role for a state. The government identifies that there is something going wrong in a particular country or a state, and then they just took measures and they just take the changes to transform that declining state. That is called as economic reform. When we are talking about economic reform in India, the main economic reform has been introduced in 1991. In 1991, when Dr. Manmohan Singh and PV Narasimha Rao, they both together introduced the economic reform in India that was called as LPG policy. LPG policy means liberalization, privatization, and globalization policy, right? So let's talk about that economic reform in India. First of all, when we are talking about the three main pillars of the economic reform, it was liberalization, privatization, and globalization. It is also known as new economic reform, or you can also call it as new economic, right? Now, let's talk about what is liberalization, what is privatization, and what is globalization. So, liberalization is actually derived from the word liberal. Liberal means freedom. So, liberalization means that giving freedom, okay, giving or removing of different type of restriction which were imposed on the economy before 1991. See, when we are talking about this year before 1991, there was a lot of restriction, there were a lot of restriction in the industrial sector. So people were very reluctant to enter in the industrial sector because of these restrictions. Like for example, at that time there was very big license raj that has been established, and the license system, you will not able to get the license easily from the government officials. They will demand you from a big bribes, etc. And that's why many individuals were very reluctant to enter into the industrial sector. So the very first reform that has been introduced is the liberalization. Liberalization means giving freedom to the private sector, giving freedom that the people can easily enter into the industrial sector, removing the unnecessary restriction which was imposed in the entry of the industrial sector, that is called as liberalization. Now, privatization means giving entry to the private sector. So before 1991, man, maximum resources, they were monopoly of the government. Monopoly of the government, like for example in railway, in nuclear, in different type of insurance company, you can say in different type of mining sectors, maximum sectors were in the hand of the government. So government were not able to manage these sectors efficiently. So at that time, privatization has been recommended. Privatization means removal of the monopoly of the government so that the private sector can easily enter into the market. That is called as privatization. Globalization, we have already discussed in detail in the last class. Globalization means what? It is the economic integration of the countries, right? When you are trying to connect your economy with the rest of the world, that is called as the globalization, right? We have discussed in detail globalization in the previous unit, right? Now, next thing, when we are talking about the different type of committees during this particular time period, means around the 1991, very important. So there was Chakravarti Committee on Monetary Policy 1985, Narasimha Committee 1 on Financial Sector Reform 1991. There was Padmanabhan Committee for reviewing the bank supervision 1996. There was Narasimha Committee second on the banking sector reform 1997. There was Verma Committee on weak banks 1998. There was R.H. Khan Committee on harmonization of role of financial institution and bank, and it was introduced in 1998. So these were the very important committee that has been introduced to improve the overall performance of the banking sector, right? And this is a very important part. Committees, you have to learn, you have to memorize, because anytime the questions from committees can be asked from you, right? Now, next, when we are talking about the Narsimha Committee Phase 1. So, Narsimha Committee Phase 1, it was February 1992, and there was a different recommendation of Narsimha Committee Phase 1. Now, when we are talking about the Narsimha Committee Phase 1, there was capital adequacy no, means Narsimha Committee has recommended to maintain the adequate capital in the bank, then reduction of cash reserve ratio and statutory liquidity ratio, then deregulation of the lending rates, then there was credit delivery, then debt recovery tribunal, a strong supervisory system, entry of new private sector bank, and merger and amalgamation. So these were the important recommendation of Narsimha Committee Phase 1, which has been introduced in 1992. Important is the year, very important is the year, so please remember the year. Clear? Now, next, when we are talking about the second phase of Narsimha Committee, it has been introduced in 1998. Now, in second phase, we have different reform like prudential reform. Prudential reform means Narsimha Committee phase second has recommended that Indian bank should follow the standards which has been set and followed in the international bank to avoid any type of risk. Second is the supervisory reform. Now, under supervisory reform, CAMELS is very important. CAMELS has been implemented. Now, what is CAMEL? Capital adequacy, asset quality, management, earnings, and liquidity. So camels has been introduced. Right? Now, next, institutional and legal reform. So in institutional and legal reform, again different type of recommendation has been given up, like the establishment of debt recovery tribunal. There was Lok Adalats, which was people court, which has been introduced for the faster recovery of the debt. Then here SARFAESI Act has also been introduced, and banking ombudsman scheme also has been introduced, right? So these were the institutional and legal reform of Narsimha Committee phase second. Clear? Now, next thing is the foreign market reforms, right? Now, in or around economic reforms, when economic reforms has been introduced in 1991, there was different reform in different sectors. Like in the foreign exchange market sector, the FERA has been replaced with FERA. So FERA was the Act, Foreign Exchange Regulation Act 1973. This was the earlier act for regulating the import and export sector in India. But this was the very restrictive kind of act. Then FERA has been replaced with FEMA, Foreign Exchange Management Act, which has been introduced in 1999. Now, FERA has been replaced with FEMA. Why FEMA has been introduced here? So, Foreign Exchange Management Act has been introduced to make some liberalization and to give some freedom in the foreign exchange segment, right? So, to support, to enhance the export and import in India, there was Foreign Exchange Management Act which has been introduced. Clear? There was different foreign institutional investments and NRIs which are permitted to invest in India. Right? Now, in the insurance sector reform. So, in to regulate the insurance sector in a very proper manner, IRDAI, Insurance Regulatory and Development Authority of India, has been introduced, right? So, in the insurance sector reform, a large number of private insurance companies was introduced and they entered into the segment. Plus, investments, FDIs were allowed, and to regulate the insurance market, there was Insurance Regulatory and Development Agency, which has been introduced. And finally, in the capital market reform, SEBI has been introduced, Security Exchange Board of India. See, SEBI has been established in 1988, but SEBI got legal status after the SEBI Act 1992 has been passed. And SEBI was formed to regulate the capital market. SEBI was formed to what? Regulate the capital market. And capital market is a market where long-term instruments are dealt. Clear, everyone? So these were the different type of reforms which has been introduced in and around 1991. Clear? So we have LPG policy. LPG policy means liberalization, privatization, and globalization. In insurance sector, we have introduced the IRDAI, Insurance Regulatory and Development Authority of India. Then in the banking sector reform, there was different type of committees which has been introduced. In that committees, two committees are very important. Narsimha Committee Phase 1, 1992, and Narsimha Committee Phase 2nd, 1998, in which camels have been introduced, different type of reforms which has been recommended, right? So these were the most important part of this chapter. Okay, this chapter is a very important chapter. Always remember, in the last examination cycle, approximately 3 to 4 questions were asked from the economic reform. What are the factors which are contributing to the economic reform? Page 1 of this PDF, read out that, because that is very important. Factors can be asked, LPG can be asked, etc. So thank you so much. I hope that you have all understood this video. Thank you so much. Have a very nice day. Take care, everyone. Bye bye, guys. Bye, everyone. Take care.